Hello again. NFP Friday has been replaced by NFP Thursday this month, but it doesn't make it any less important because it falls on a different day. I've been speaking to Josh Mahony from IG. It's NFP Thursday, not NFP Friday this month. Yeah. What do you make of the employment situation in the US? Because last time we saw, another strong number in terms of jobs created, but the unemployment rate ticked up. So can you try and figure out what's going on there?
Yeah, I think that really that was down to an increase in the participation rate, which is a good thing. So ultimately, it would be great if they had strong NFPs, unemployment rate moves towards the downside. But as long as that participation rate remains very low, it's not a necessarily good thing for the economy. So I think overall it was a good message within the last meeting, even though when you saw the unemployment rate move higher, it was a little bit confusing for some people. Ultimately, the strong figure in terms of non-farm payrolls is the real major number to look out for, because the fact that we saw unemployment moving the opposite way in this occasion can be almost discarded, because we also got positive movement in terms of participation rate. We did see that 280 number last time. I think we're likely to see a fairly strong number this time. I think we're around about the sort of average over the last 12 months is around about 285. So, personally, I think we're actually going to see an outperformance compared to the expectations, which is around sort of 235.
It is all rosy in the US garden, because obviously we're moving towards this eventual rate hike by the Fed, but we saw those durable goods orders last week coming pretty weak to what the market expected.
Yeah, I mean, ultimately you have to bear in mind that we have so many different readings. It's quite difficult to really pin the single one that's going to show us whether it's strong or weak. And ultimately, we have seen the economy pick up somewhat compared to what was a very poor Q1 and the beginning of Q2. It has certainly been strengthening since then. The question mark is what type of contagion effects are we going to get from the Eurozone? And in terms of what we're seeing from the Fed, they're certainly looking more positive towards a September rate hike. Whether this whole Greek debacle is necessarily going to be able to push them the opposite way and see them push it later into the year, which seems quite likely, because on most occasions essentially what we've seen is that it keeps getting pushed back and delayed, and generally we see more dovish and more risk averse central banks when it comes to raising rates as opposed to cutting it on the way down. So I think it's likely we'll actually see that pushed later into the year because of what's happening over in Greece.
So what do you think the FOMC is really looking at the moment? Do you think it's really concentrating on those jobs numbers, or do you think it's just, it's got this big spreadsheet out in the middle of the table, everyone's discussing, and they're just waiting today to see a consistent flow of good data across the whole economy?
Yeah, I think the jobs picture has been fairly strong. I think it's likely to continue apace. I think they want to see some sort of stability in terms of the jobs market. Some of those other figures in terms of the average earnings have really been improving. The participation rate actually moving towards the upside is definitely a good indicator. The US economy is massively reliant on consumption, so strong consumption figures, strong retail sales figures that are going to be very positive, and that's the kind of thing that we need to be seeing in terms of exports and imports as well. We want to see their exports being strong, and especially as I was talking about the Eurozone and the weakness within the Eurozone, if they continue to buy products from the US, I don't see why it's necessarily too much of an issue. But I think it's the worries within the Eurozone that are coming from Greece that could be impacting it, where people lay off decisions within the Eurozone because of the uncertainty about the future of it, should the Greeks actually decide to leave the Eurozone. So that's the bigger picture that might play out ahead of any sort of rate hike later this year.
Last question. We have Greece going on, we have the NFP numbers coming up. If we do see strong NFP numbers, we see more uncertainty about Greece, does that mean that we're going to be pushed towards parity in terms of that euro-dollar rate?
I think it's likely we're going to see parity at some point in the near future. I mean, quite frankly, we saw yesterday in terms of the release of, essentially what we heard over the weekend, and then we saw markets spike sharply lower. We saw euro-dollar sell-off, and then it pretty much regained everything. So essentially what that shows to me is that with regards to the exit from the Eurozone, people don't necessarily know whether it's a good thing or a bad thing. Initial response is always going to be that it's a bad thing for the euro, but then what we've seen with the strength following that essentially means that some people are thinking, well, possibly what does this mean for Fed? That's one argument. But also, maybe this is a positive thing for the euro, and maybe the euro is depleted to an extent because of what's what's happening over in Greece. But you've got to bear in mind that just purely from a sort of monetary policy stance, I think over time we're going to see continued strength in terms of the US, for when we do actually see that rate hike, and weakness in terms of the fact that we've got QE for some time in the Eurozone, and QE2 could happen at the end of that, and QE3 for all we know. So we don't know how long this is going to last. I do think parity is almost a foregone conclusion. It's just when, as opposed to whether it's going to happen.
Well, thanks to Josh. Make sure you stay safe in those markets. But from a very sunny London, goodbye for now.